tariffs will lead to an economic slowdown. That economic slowdown will put the Bank of Canada in a horrible place, which is low productivity, high pricing, inflation. And as a result, they're going to have to make a choice. Which one do we lean against? And the Bank of Canada's mandate is to keep pricing stable. As a result, they're going to lean on bringing the inflation down, not productivity. Therefore, they won't lower rates as much as they should in order to get that pricing down.
A lot of the banks are very exposed in their portfolio of mortgages that they hold. So the downside is big. And if they don't finance this and there's more powers of sale that are going up and we start to see more delinquencies and more insolvencies, technically, I guess, I mean, theoretically and beyond theoretical, we could have a literal bank meltdown. Not likely to happen in Canada, but it's a possibility.
Let's back it up to the tariffs for a second. Listen, you run a very successful retail business, and if there's anyone the tariffs are going to impact, it's going to be you. So let me ask you, what are you doing about it? Because I've been asking business owners, small, big, medium-sized business owners, what they're doing about the tariffs. I'm getting a variety of answers. But let me just ask you, PF. I mean, what are you doing right now with regards to the tariffs, and what's coming down the line from your various suppliers? Which, by the way, a ton of that stuff comes from the U.S. and from around the world. But what's happening? Tell me what you're seeing.
Okay, well, that's an interesting question, and glad you asked it. But what's funny about our particular industry is about 95% of the stuff that we're buying, we're buying from suppliers in Canada, but their goods are produced, guess where? In China, not the US. So there's very little of what we're selling is coming from the US or even made locally as in Canada. No surprise there. But ultimately, we're not really at the effects of tariffs directly. There's some items and we'll stock up on those particular items, maybe hedge our bet. But I think the tariffs are going to come in far lower. I think the big concern is on steel. And this goes back to the fear of housing prices dropping. So let's talk about housing prices and the fear that there's a bubble and it's going to, housing prices are going to drop. So we're going to take condos out of this conversation. We keep going back to it, but it just skews numbers. And we know that the condo market is melting down in both Vancouver and Toronto to the degree that it is. Let's just take that out of the conversation. But the steel, there's a lot of steel goes into housing, JG. And
yeah, tons.
Okay, well, what do you think that's going to do to housing prices, by the way? Do you think that's going to get absorbed by the end user? Yes.
No. Sorry, I thought you meant it's going to be absorbed by the construction, by the builder. And I said no, because it won't. It'll get passed on to the consumer.
100%. So, when we look at even having the conversation, again, about the importance of getting your capital to work in real estate being that, prices in housing, man, oh man, I just can't see it coming off. It may chop sideways for a while, but when we start to look at this thing called tariffs, just as one example, we're going to see housing prices rise because those numbers are going to get passed on. So we need to hedge, again, put our capital to work. So I think we're going to be at the effect of all of that.
Well, 100%, Patrick. And actually, we're going to come back to residential prices in just a sec here, because some data has come out for where the prices have gone from January this year to January last year. So, a lot of people, and that's the thing, they're reading headlines, they're making a ton of assumptions. The average person, even if they are an investor and they own one or two or three properties, they often aren't in the real estate business quite as much as you and I, Patrick. So they're making a ton of assumptions. They're assuming where the price is going based on stories they hear, based on their neighbors, so on and so forth. But what has actually happened to the prices in the last year, Patrick? As you can see from this chart, just about every province other than Manitoba and BC are up. Some are up significantly. Ontario is not up nearly as much as it is, but it's still up 1%, Patrick. This isn't down 5 or 10 or 12 or 15% like people expect. It's still up 1% in Ontario. BC's down, a little less than 1%. Manitoba's essentially nil, but Alberta's up. Saskatchewan's up. Quebec is up. That one was surprising to me. New Brunswick is way up, even though I find they got a really low they have a much smaller denominator to grow off of. But still, the average person, if they look at this chart, are going to say, I didn't think this was going to happen. I didn't think this is where the real estate market was going to be. Even with all the challenges, this is the reality. These are the numbers.
Yeah, and if you were to take again, if you take the condo market out of there, those price increases have been dramatically higher because we're not. We've always said, condos are not where that's pre-construction. So let's just talk about detached and realizing that detached prices have gone up in many regions, and there's exceptions to all of these rules. By the way, the point is that pricing on housing has not come down. I don't see it coming down in that detached space. And I think that's really driven by just the cost of doing business. The cost of inflation will continue and house prices will increase in real terms.
Yeah, the tariffs. There's no doubt the tariffs, and we talked about this in the last show. But I just want to recap kind of the three major elements of these tariffs and what's going to happen. Uh, if it was just about the tariffs, that would drive prices of real estate up for sure. 100% construction prices are going to go up. Therefore, that's going to get passed on. But the thing is that we have to fight against is that the tariffs will lead to an economic slowdown. That economic slowdown will put the Bank of Canada in a horrible place, which is low productivity, high pricing, inflation. And as a result, they're going to have to make a choice. Which one do we lean against? And the Bank of Canada's mandate is to keep pricing stable. As a result, they're going to lean on bringing the inflation down, not productivity. Therefore, they won't lower rates as much as they should in order to get that pricing down. That's a tough spot to be in, Patrick, and I really hope we don't get there because it's a really, really hard balance to strike.
Well, JG, if you recall 2 years ago, I'm saying, and I said on more than one occasion, that we are at a risk of entering into a world of stagflation. And I think that is very real. Even just what you said is a description of stagflation, and that's what we're bumping against. But I want to finally, like, as we wind down here, I want to bring one story to the table that is being talked about. We'll shine a bigger light on it right now, which is what's happening in terms of what recently RBC has done in terms of financing the meltdown of the Toronto, Vancouver condo market. And that is this. What, of course, was happening, a lot of pre-construction, people were paying 1.2 million as an example for a pre-construction condo. Now they come to fruition. It's time to step up, get financing, take position. And what have we got going on? Well, that $1.2 million condo is now $800,000. Rents were X, now they're Y, much lower. Here's what are, and so when you go to get financing, you bought it for 1.2, counting on financing of 1.2, it's 800,000. You got to cover that spread. Now, I can understand why RBC is doing this, but what they're doing is they're doing what is called a blanket appraisal. So they're literally looking at and not going out and doing, they're going to old appraisals, the blanket appraisal, saying, oh no, it's worth 1.2 million. And they're actually providing financing on that 1.2 million. Now they got the reason to do that, of course, is that they probably also have financing on the building from the builder. And if they let those prices go, if they do not finance, if people start to foreclose, which is already happening, they stand to lose a lot of money. So they're going to lend against 1.2 million, not the 800,000. That's the game that RBC started, and other banks are stepping into it, by the way. They are protecting their downside, but what does that do? It protects the downside of the housing price as well. So it's a real messy situation that's going on in this country overall, especially in that condo market.
I find it, I really want to dig into this, and hopefully maybe one of our viewers knows more about this, Patrick. But I agree, this makes sense for RBC to do this if they are financing the developer. Say the developer has financed with RBC, and by the way, oftentimes that's what happens. The bank or the lending institution that is financing the development will often facilitate the exit because they're essentially facilitating their own exit, and they make money all along the way. And the fees are astronomical, by the way. They're just nuts. But this is how they make a shit ton of money. So it would make sense for RBC to say, listen, we can't exit this developer. We are going to be left holding both sides of that bag if we don't do something. So it makes sense for them to do it if they have financed the development. I don't see it as making a whole lot of sense, though, Patrick, if they didn't do the development. I just want to find out, are they doing this for anybody and everything? I just find this kind of fascinating.
I think it's probably conditional. It probably isn't everybody. I think they're looking at it, but they're protecting their downside. I mean, we know that OSFI came in and all banks had to up their reserve on the downside of mortgages that they were carrying, because a lot of the banks are very exposed in their portfolio of mortgages that they hold. So the downside is big. And if they don't finance this, and there's more powers of sale that are going up, and we start to see more delinquencies and more insolvencies, I mean, technically, I guess, I mean, theoretically and beyond theoretical, we could have a literal bank meltdown. Not likely to happen in Canada, but it's a possibility. And I think everybody's just protecting their downside as we go forward in this really uncertain time economically. And it's hard to be optimistic about what's happening in Canada economically. It just is. At the end of the day, when you unpack the unemployment numbers, we're seeing unemployment going up, not down as advertised. And this is all a concern. If people aren't working, they're not spending money, the cost of living is getting higher, the cost of rent, the cost of food, the cost of gas. I mean, people just don't have the disposable income, and that shuts down the consumerism, which is a big part of our economy.
Yeah, 100%, Patrick. And I did a bit more research on this while we've been going back and forth, and it looks like RBC is offering that blanket appraisal program, primarily for deals that they did the development on. And I get it now, because they need to exit them. They're essentially got to exit themselves out of their own deal, and the only way they're going to do that is by doing these blanket appraisals. Kind of interesting. And I think you mentioned, I think earlier in the show, maybe even off air, where there's a bit of a loophole here, because this is not something like, listen, if the average Joe went into the bank and said, I bought this thing for 1.2, it's only worth 800 now, can you finance me on 1.2? There's no way on earth they would do that for anybody else. Interesting though, they do it for themselves. Fascinating.
Well, it would be interesting to know. So, for example, if I bought that building, or if I bought that particular unit for 1.2, I was at risk of only having, the value of it at 800,000, having to deal with financing, but I got full financing on it because RBC is covering their ass. Ultimately though, what am I doing? There's a profit there. Am I going to pull it off the table? What are people going to do with that finance?
No, I bet you they won't let you. They'd be writing that into the deal.
I have no idea, but you start to, yeah, these are the kind of the details. It's still a relatively new thing that's coming out. So as we learn more about it, we'll share it with our listeners.
It is very, very interesting, Patrick, and I'm sure there's some specs on it that are quite unique. But I bet you in the end, it's actually quite smart for RBC to do this, like for themselves. Like looking at it, if I was the CEO of RBC, it's kind of an interesting way to do it, and it's an interesting way to protect yourself. And in fact, I bet you that if you look into these things, Patrick, they probably kicked out amortization on these deals down the line too. They're probably doing 35, 40-year amortizations on them. And you know how much money those banks make on that extra 10 years or 15 years of amortization? It's just crazy.
Banks aren't dumb, but you're absolutely, and that, by the way, is a great point, because that is in fact exactly what's going on.
Well, Patrick, even though this was an incredibly depressing episode with no good news and a bunch of unhappiness, I, for one, am happy. You know why? Because I am progressing on my goals. And I think you said something interesting there at the beginning of the episode, which is, happiness isn't about achieving those goals necessarily. It's about progressing towards those goals. And, that is something that's in everyone's control, Patrick, is they can progress on their own goals. So yes, sometimes real estate's going to go sideways. And yes, sometimes you're not going to have, the best news in the world, but you can still make progress towards your goals. So I'm getting out of here, Patrick, and I'm going to make progress on my goals.
Well, I think it's a great point. And yes, if you stay engaged, keep looking into the future, don't sit on the sidelines, little steps making progress. It's one step at a time. You'll be much happier when you look back and go, holy cow, have I ever come a long ways? But it is one step at a time. Keep grinding. In spite of the headwinds we face, lean into them, keep moving. So if you like these episodes and you want to learn more about what's going on with real estate in Canada, investing in real estate, and understanding how to invest in real estate the right way, head on down to the descriptions below, follow those links.